Hello, Intro to Accounting. We are on the last unit here, and this is lesson 8-2, preparing a post-closing trial balance. So let's jump in and knock out this last unit that we have in this class. So we see here it says general ledger accounts after closing entries are posted. In 8.1, we went ahead and did those closing entries. We took our sales and our expenses and income summary, went ahead and ate those up. And then our income summary was eaten up by our capital, which was either going to increase it or decrease it, depending if we had a net income or net loss. And then finally, drawing was the other account that was a temporary account that was absorbed by capital. So you can see here, these are just some of the balances that were going ahead, and a lot of them that were temporary, like drawing, will have a 0 on it. Income summary will have a 0 on it. We look further down, sales will now have a 0. All the expenses will have a 0 balance. That was the goal. Let me just go back real quick, see, was there anything else on here? No, just pictures of closing. So now what we're going to do is we're going to create a post-closing trial balance. And this is going to take all of our permanent accounts, and we're going to compare the debits versus the credits. So if we look here, it says after the closing entries are posted, Delgado Web Services verifies that debits will equal credits in the general ledger accounts by preparing a trial balance. Trial balance prepared after closing entries are posted is going to be called post-closing trial balance. If you look here, it says only general ledger accounts with balances are included on a post-closing trial balance, which means that these are going to be all the balances that are permanent balances. So the permanent accounts, assets, liabilities, and owner's capital have balances, so they are all going to appear on that post-closing trial balance. Different accounts that were temporary, like income summary, revenues, and expenses, and drawing, those aren't going to be on our post-closing trial balance because we brought them all to 0. So let's just look at the steps that we have here. First thing, we put in a heading. So this is the same heading that we've had the entire time. This is going to be like close to the balance sheet heading where it's just a specific date. And then after that, we're going to write out all the account titles that we have. So we start out with our assets, right? So cash, petty cash, accounts receivables, supplies, prepaid insurance. Then our liabilities, accounts payable, and then our capital accounts, which is capital here. Michael Delgado Capital. We're going to put in the account balances. Whatever they have in the ledger is what we're going to transfer over. We write a single ruled line. That's pretty much just saying, hey, we're adding up our debits and credits. And then from here, we compare the totals. Yep, they're the same. That's good. And then we're just going to draw that double rule line showing that they equal one another. So that's really it. We're going into our ledger and we're just recording everything that still has a balance. And we're going to do it in a way that it's assets, liabilities, and then our equity accounts. And here is going to be our accounting cycle for a service business. So this is what you have accomplished in this class. Try to think about the first day when you came in and we started looking at accounts and you maybe didn't have any clue what a debit or a credit was or how these transactions would affect different things. And now you could go ahead and run through all these steps and almost second nature when it comes to these. You start remembering how these are being affected without even having to look at your book or anything else. So the first one, we analyze transactions, then we journalize those transactions. We then posted them to the ledger to make it more organized, seeing what our account balances are. We prepared our worksheet, and then we journalized and posted any adjusting entries that we had at the end of the month. We used that worksheet and adjusting entries to prepare our financial statements. Now we're journalizing and posting those closing entries. And then after that, we prepare our post-closing trial balance, and we have successfully completed an accounting cycle. And for Delgado Web Services, their accounting cycle is 1 month. Different companies might have 3 months as an accounting cycle. Some might have a whole year as an accounting cycle. So that is our accounting cycle, though. These 8 different steps that we have. We look at the ends, and That's it, okay? I told you 8.2 is going to be really short, and it is very, very short. So let's jump in and look at the work together and on your own. All right, so let's take a look here, and it says the list of accounts shown here is taken from the general ledger or of Fix It Now. Indicate which of the accounts will appear on the company's post-closing trial balance, and then we're just going to check all that apply. So what are we really doing here? We're looking at permanent accounts and temporary accounts. We just need to list, or we need to check all the permanent accounts that we have. So let's see here. It's going to be our assets, cash and petty cash. Those don't go anywhere. Accounts receivable, B. Widwell is still going to owe us that money. Supplies, prepaid insurance, accounts payable, and our capital. Now we look down here, we've closed drawing, we've closed summary, we've closed sales, we've closed all of these expenses. So it's only going to be our permanent accounts. Let's grade that step, and we are good to go there. Next, we have a post-closing trial balance. So here, what we're really doing is we're just taking those permanent accounts and we're transferring them onto our post-closing trial balance. We look here. I'll move these over. Bring it down a bit. And we're going to figure out, are these debits or credits? It's really not that hard to figure out, right? We're just going to open it up. You can see the balance for cash is a debit of $4,900. Next, we'll look at petty cash. Petty cash has a debit of $75. Next, we look at accounts receivable for B. Widwell, has a debit balance of $1,387. Next, we look at supplies. Supplies has a debit balance of $75. Prepaid insurance is going to have a debit balance of $250. Now we get into the liabilities. We have accounts payable, Southside Supplies. It's going to have a credit balance of $267. And Connor Whitney Capital is going to have a credit balance of $6,420. So let's go ahead and add up our debit side and our credit side and see what we have here. I'll add on to a little calculator. There we go. Let's go ahead and do 49. Oh, go over here. 4,900 plus 75 plus 1387 plus 75 plus 250. We're gonna have 6687. Okay, so 6687. Let's write that in our total. Now let's go ahead and add up the credit side. So we have 6420 plus 267, 6687. So our debit side matches our credit side. So our post-closing trial balance should be correct. Let's grade this final step. That's all she wrote, okay? That is all. We'll hit save and continue. And it just brings us to our on your own. So that is all. That is 8.2. If you go into the application problem here, let me just jump in. It's going to be the same thing, okay? There's really no difference. This is a very, very small unit. And when I say small, I mean small, right? So if you have any questions on this, please let me know. But this actually concludes all of the content in the Introduction to Accounting class. If you have any questions, let me know.